Good afternoon and welcome to BizTech's Midday Market Watch. Our guest today is Halley. He's the Senior Market Analyst, Asia Pacific at OANDA. Now, Jeff, great to have you back on the show.
Cheers, Brian. Good to be here, mate.
Mate, just before we get your insights, let's have a quick look at markets and see what's happening across the region. Now, the Nikkei is up a whopping 2.65%, and it's currently at 26,203.66. Shanghai Composite is the odd one out. It's slightly in the red, 0.07% at 3,412.08. Hang Seng is marginally up 0.05% at 26,498.67. The ASX 200 is up 1.44%. Trading at 6,656, and the Kospi is up 0.52% at 2,616.22. SGX is trading at 2,873.36. It's up 0.86%. And Bursa Malaysia is another outlier. It is down slightly 9.75 points and trading at 1,587.73. Jeff, we see, markets are really buoyant over the vaccine news, particularly the Nikkei, which is up significantly. What's your view on just the overall market?
Well, definitely the vaccine news from AstraZeneca has had a positive effect on markets. It hit the streets late our session yesterday. What we saw overnight were purchasing manager indexes from the United States, manufacturing and services. They both blew the expectations out of the water, massively outperformed, and that lifted equity markets and saw the dollar retreat. There doesn't seem to be any effect on services in particular from this resurgent COVID-19 pandemic, suggesting that the US economy is actually underlyingly pretty strong. Then this morning, we saw what amounts to an indirect capitulation by President Trump in the election by instructing the General Services Administration, which is a department that handles, amongst other things, the transition between regimes, so to speak. And he's given them permission to release funding to the Biden administration to allow them to do what it is they have to do. That Biden's obviously perceived as more trade friendly, and that's been positive for Asian markets. China's weighed down by this impending blacklisting, apparently, of 89 companies in China that are associated with the Chinese military, particularly in aerospace. So I think that's why China hasn't really performed today. Whatever happens over the next couple of months, it seems that President Trump is intent on taking a few more shots at China on trade before he goes in mid-January.
Now, news has also leaked out that Joe Biden has appointed Janet Yellen as Treasury Secretary. Now, markets obviously have cheered that news, but what signal does that send? And what is Janet Yellen good for Asian markets?
I think for a start, she's going to be much more positive for trade. So she's always been a globalist. She's been at the Federal Reserve right through the global financial crisis. And she's seen the taper tantrum, etc. She understands how intrinsic US monetary policy is to the functioning of the rest of the world, notably Asia. She'll be pro-trade, but also she'll be pro-stimulus. So fiscal stimulus is definitely going to be on the boards for the Biden administration. This appointment confirms it. That will be positive for US equities, also Asia, because it should lift growth around the world. Of course, the challenge will be getting that fiscal stimulus package past the US Republican Senate. And I think that gets more challenging by the day, particularly when you see these PMI numbers last night.
Now, let's move on a little bit to Australia, which the ASX 200 is trading at near 9-month highs. I think the last high was somewhere around late February. What has this surge been driven by?
It's this great rotation trade as these vaccine candidates have now come to the market. We have 3 in the developed world that apparently appear to be quite viable. We've seen this rotation trade out of the working from home technology side of the market, as I call it, into these bombed out legacy industries. Consumer discretionary is the buzzword for it. We saw that after the initial Pfizer announcement, 2 years of movement in about 2 hours. But Australia is a very heavily resource and banking based market. Those are the largest cap stocks. And so resource based, commodity centric, pro-cyclical, whatever you want to call it, economies are best placed to outperform in 2021 as the world recovers, as these vaccines get out into the wider world. So indexes like Singapore has also outperformed after being sort of in the naughty corner for all of 2020 as well. So these legacy industry heavy stock markets, as I call them, which have pretty low amounts of tech stocks, they are set to outperform into the end of the year.
Now, okay, staying on Australia itself, why do you think that is sustainable now, especially considering the disconnect between, in Australia in particular, the stock market, the housing market, and the real economy? So the Australians pumped in 75 billion Aussie dollars, or 70 billion Aussie dollars on a scheme called JobKeeper to basically ensure, and that's worked to ensure that people keep employed, so businesses can keep going and so forth. Now that has apparently, in the latest data that just came out yesterday, just indicated that saved 700,000 jobs. However, JobKeeper Mark II, which has been announced, will last till March, has reduced amounts. And basically then there's a school of thought that says the Australian economy has been propped up by this, and once JobSeeker has been released from the market at the end of, I think, 28th of March, the disconnect will essentially happen and the real recession will hit Australia. So will that then impact the markets as well?
Not for nothing is it called the lucky country, and people have been calling. I worked in Australia, I think it was 25 years ago, and people were nervous about house prices then in Sydney. They've kept on going up for the next 25 years. So not for nothing is it called the lucky country. What you're describing here is a process that has been going on all over the world. United States, Europe, UK, New Zealand, the developed world have all followed the same model. But when you look at the Australian data, when we had the employment data out last week, they added 197,000 jobs in October, of which 97,000 were full-time jobs. So I think what JobKeeper has done, this fiscal stimulus, has basically given a tailwind to the post-lockdown recovery and allowed the domestic economy, which is where most of the economic activity in any economy is focused, allowed that to achieve escape velocity. We've also seen record demand for resources from some of their primary exports, despite this secret China trade war that China's having with them. So I think there's a lot of resilience in the Australian economy, and that is being reflected in that. And I think, the JobKeeper itself, it's a political decision. Australia is a very low debt country, government-wise. If things start looking shaky at the end of March, I've absolutely no doubt that it will be extended again. There's no way they're going to let 700,000 voters go out of a job, but I don't really think they're going to need it.
Now, Jeff, thanks for your insights. We've been speaking to Jeff Halley, Senior Market Analyst, Asia Pacific at OANDA, on BizTech's Midday Market Watch. I'm Brian Fernandez. Check out www.biztech.asia for business and technology.